Good morning, staffers. Today, in continuation of our Understanding Staffing Financial series, we're going to deep dive into the income statement. And the income statement is a statement that tells us how we've been doing over a specific period of time. And not only that, but we are going to deep dive into the Adecco income statement to see how they've been doing and find out if their strategy has really been working for them. Has it been helping them to help us learn what we need to do in our companies in order to be successful? So stay tuned. Here we go. Good morning, staffers. I'm so excited because we're continuing on in our series, and today we're going to talk about the income statement. So exciting. But before we move on, I want to make sure that you don't miss a beat, that you get all of our education materials, that you really have a significant impact on your business based upon the stuff that we are analyzing and the training that we're giving. So if we could take a moment right now, and there's a little button at the bottom of your screen called subscribe. It should be red. Click that subscribe button now so that we can make sure you don't skip a beat. So on my screen, I have the Adecco income statement, and Adecco is calling us the Consolidated Statement of Operations. And in our previous video, we looked at the balance sheet, and we talked about it in the previous video. The balance sheet is a picture, it's a snapshot in time. However, the income statement, it tells a different story. It tells a story of performance and how we perform during a period of time. So in this case, this income statement is showing the Adecco performance from 2016 all the way to 2018. And not only that, but these statements are publicly available. They're actually available on their website because Adecco is a publicly traded company. And so you'll be able to pull that down. And usually they update these quarterly when they do their quarterly reports. So just some things I want to kind of point out. First of all, the Adecco statements are in the millions because they are a big company. And also their statements are in euros because they are a European company also. So when you're looking at the Adecco numbers, keep in mind that these numbers are actually higher because at this particular point that we're doing this video, the euro has a higher value than the US dollar. So you'll have to do that conversion there. But really what we're seeing here is this is their performance over these particular years. So it shows us the amount of revenue Adecco earned and the direct costs associated with earning that revenue, as well as some of the operating expenses that was involved. So, and of course, the direct costs, I'm assuming, is most likely their temporary workers that they're placing. They have payroll costs associated with that. And in the other section here, this SG&A, you're going to find more so the support costs. So like their advertising costs, their office staff that they've had to use in order to staff their operations, as well as some other things too, like the amortization costs for some of the divisions that they purchased along the way. It looks like they had some impairment of goodwill, maybe when the operations wasn't performing and they felt like it was a permanent markdown. And so here I want to kind of point out just some things that I am noticing here. So here in 2018, Adecco had $23,867,000,000 or euros in revenue. And this is actually an increase of about 200 million euros compared to 2017, where they only had 23,660,000,000. And of course, with rising revenue, you've got some rising direct costs, right? Because in order to earn a dollar, you have to place some additional workers in the field. And so they have for 2018, 19,434,000,000 in direct costs versus 2017, 19,314,000,000 in direct costs. So about a 100 million more. And so we're seeing an increase in gross profit of 4.4 billion euros versus 4.3 billion euros in 2017. And this is mostly attributed to the 200 million in increased revenue, but offset by the 100 million in extra direct costs that we're seeing. But overall, we're on the rise in terms of gross margins, gross profit. However, what we're going to see here is their operating income was less. The operating income was less, even though revenue was higher, right? And the question is, how was that? Well, apparently it cost them more to operate, is what it's saying. We had $3.4 billion in between selling general administrative costs, and we had $3.1 billion in 2017. So it costs us more. And I want to just kind of say a couple of things. In one of our videos, the MD&A video, we're going to really dissect to find out exactly what what was causing this increase in cost, because it had a substantial impact on their bottom line, including these impairments that happened. And just and because of these increase in costs just for operating expenses, it had a significant impact on their bottom line, their income. Because even though they brought in more sales, even though their margins were higher, ultimately the impact is their net income was lower, right? Something else I want to point out is when I'm looking at the gross margins, I'm computing this based upon um, the gross margin, meaning the gross profit percent against total revenue. Adecco's gross margin is 18.57. However, when I compare it against the industry average in 2017, the American Staffing Association, the industry average was 22.81%. So that means that Adecco is selling their services at a lower markup than the industry, is what that means. So they are really hoping that they have the volume, it looks like, and so they're hoping that they reduce costs, they'll have volume. And so I want to point out, we do have a great video on understanding staffing profits and really understanding the impact of markup and discounting your rates in one of our videos on YouTube. So definitely take a look at that, look it up, because it is a serious consequence. And you can see that with Adecco, they have to sell more services in order to have the same profit, is what they're saying, at a quite a substantial rate. In terms of profit, in terms of net income, Adecco's profitability was only 1.9%. And this is very different from the industry average, which is 4.11%. So again, you're seeing the impact of not charging enough compared to the industry, which is having a significant impact on their profitability. And and it's even more interesting because it was 1.9% in 2018, but in 2017 it was 3.3% was their profit as a terms of percentage of sale. And in 2016, it was 3.2%. So you're seeing something's going on in Adecco, which is causing their profitability to plunge. And really, you know, I think the notes are, when we go through the MD&A, if you watch that video, it's going to make a lot of sense from an operation and strategic point, what was happening in terms of what they were investing in that was costing more and really having an impact on their financial statements. And so this is the income statement, which is gauges a period of time, what their performance was. And stay tuned for our video on cash flow statement, and definitely check out the MDA video in order to figure out what exactly was Adecco's strategy, which caused a decrease or plummeting in profit in 2018. Anyway, I will talk to you soon.